Hello to all traders. My name is Stavros Tousios and I am the market specialist here at FXPRIMUS in Limassol. I want to welcome you to this online webinar provided to you by FXPRIMUS, and I hope that you are doing well wherever you are watching us from today. Actually, where are you actually watching us from today? Please go ahead and type that in the box. Jamaica, okay. What about the rest? South Africa, great. Andrew, Kangi. Okay, great. Our webinar is called How to Position Yourself for NFP, okay, which basically means that this will not be a webinar where I will show you how to trade the NFP or give you any strategies. This will be an educational webinar, and it will go through a few things that may help you understand the NFP workings better and how you can use some tools that may help you position yourself for NFP. Okay, so before we go ahead, I would like to read out to you our risk disclaimer. Okay, please note that forex trading and trading in other leveraged products involves a significant level of risk and is not suitable for all investors. Trading in financial instruments may result in losses as well as profits, and your losses can be greater than your initial invested capital. Before undertaking any such transactions, you should ensure that you fully understand the risks involved and seek independent advice if necessary. Any opinions, news, research, analysis, prices or other information contained on this webinar or linked to from this webinar are provided as general market commentary and do not constitute investment advice. FXPRIMUS or its representatives do not accept liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from use of or reliance on such information. Okay, so today we're going to talk about what the NFP actually is and what data are released when the report is published. Okay, so what is the NFP report comprised of, in a few words? We will see why the so-called NFP is so important to the economy, to the banks, to investors, and also to traders and other investment institutions, of course, and how it affects the price of dollar, as well as its impact on other currencies. Okay, then we will go through some risks one may want to consider for NFP. See the two methods used to position yourself for NFP, and we will close off by looking at a few ways for protecting your risk capital. So please hold tight to make sure you make notes so that you can revisit the material at your own time. And please feel free to ask any questions at the end of the session. Okay, I want this to be as helpful as possible to everyone during the time we have available. So to avoid any delays and ensure that we don't run out of time, please ask your questions at the end of this presentation. Okay, the first slide is about what NFP is. Okay, the non-farm payroll report is the report where the US Bureau of Labor Statistics releases the number of all jobs added or the number of paid workers, if you may, compared to last month. It's called non-farm because it excludes farmers, non-profit organization employees, it excludes private household employees and general government employees. Okay, for the record, farm payrolls are excluded for seasonality reasons and historically speaking due to the difficulty to gather information from the farming sector when first the US Bureau of Labor Statistics started studying payrolls and employment. So the NFP is released by BLS, the Bureau of Labor Statistics, on the first Friday of every month, okay, at 1:30 p.m. GMT. And the data reported are for the month that was just gone. For example, today's NFP will be on June's data. Okay, the NFP report is used to determine the level of the economic health in the US and is the biggest economic event on the calendar. The report also accounts for almost 80% of workers who produce the country's gross domestic product. And for that reason, it can help analysts predict, and it's also a measure, of course, of future economic activity. And since the US is the largest economy in the world, the release affects not only the value of the dollar, but also the stocks, equities, commodities, and pretty much all the markets. Okay, the report is comprised from a number of statistical data sets, each one of which has a dissimilar impact on the dollar, depending on what the economy does and the reasons behind the change in the numbers. Okay, so the most important economists and investors look at is the number of jobs added, okay, the employment change, which basically is how many more people or less people get paid to work. The second biggest set is the unemployment rate, which is a number that can influence the direction of the market. As when lower, it implies that more people have jobs. When it is higher, it implies more people are looking for work. The participation rate is the number of people that are available for work as a percent of the total population. Okay, so that would be the number of employed and unemployed people compared to the total population. Okay, the average hourly earnings is simply what it says it is. Okay, how much a worker earns per hour on average. Obviously, the more the better for the currency, as the average worker has more money to spend. Okay, wage growth works similarly, as an increase in wages could push the inflation higher. However, this may result in unemployment claims benefits also to increase. Okay, the NFP is also comprised from reports on sectors. Okay, so basically, which sectors we've seen increase or decrease in employment. Okay, where is it coming from? And also revisions on previous month's data. Normally revisions have not significant or immediate impact, but the market participants look at those to see how effectively the government evaluates job growth. Next up, so why is the NFP important for the economy? There's a few reasons here. Okay, first, the data move very close in line with the overall economy, okay, as they are released on a month-to-month basis. Payroll data are published, as mentioned on the previous slide, for each industry, okay, for each sector, which helps the Bureau of Labor and Statistics to evaluate the labor market conditions and also how a certain sector does. Also, those are published on a month-to-month basis, okay, for state and metropolitan areas. So it also helps evaluate the economic condition across all the geographic areas of the US. Okay. Now, since employment is the driving force of all aspects of an economy, okay, as more employees mean more jobs were created, so businesses did well, which means more money exists in the economy, and hence inflation may go up and the health of the economy may become better. So the jobs report influence the CPI or the GDP economic indicators, okay, gross domestic product. And that way it helps identify the rate of economic growth and also the rate of inflation. Okay, we all know what a CPI is. The CPI is an indicator that is used to measure inflation, okay, as it measures the changes in the prices of goods and services. Okay, now why is it important for investors and traders? Okay, as mentioned before, data move closely in line with the overall economy. Okay, and that shows the current state of economic activity, which means market participants may stay up to date and well informed by following the markets. Okay, the NFP is also watched very closely by the Federal Reserve Bank as they use it to decide on future interest rate decisions, and in particular the short-term, the 3-month Treasury rates. Okay, something investors may look into as an opportunity, as it's a low-risk investment. Now, since bankers find that the NFP can impact inflation, it pretty much means that they will invest in it. Okay, and we all know that banks are the market movers. Okay, the NFP is important for investors and traders also because it determines whether a contraction or an expansion in the economy may occur. Okay, which can signal future market direction. Last, since it has a very high impact on most markets, investors may find alternative opportunities on less volatile instruments, okay, to diversify the risk or to reduce risk. On to the next slide. Okay, onto this slide, we can see how the NFP release has affected the US dollar against the euro. Okay, this is in pips. So you can see on the right side of the table. So the average number of pips that the market moved on the euro dollar pair over the period of the past 6 months is 76 pips. Okay, that includes the total move until the end of the day. Okay, now note that 5 out of those 6 times, okay, 5 out of 6, the market ended up moving to the opposite direction of the headline number. Okay, and that was due to other reports having a greater impact. Okay, while the first sudden move, of course, did indeed move along with the headline number. Okay, let's go on to the next slides. Okay, let's have a close look at April's NFP. Okay, this is March report, by the way. So what happened here? The report was released and the headline number was lower, much lower than the 180 expected. Okay, so investors sold the dollar. What you're looking here, by the way, is the 5 minutes time frame. Okay, seconds later, investors realized that the unemployment rate, excuse me, came in lower, and they sort of stopped pushing euro higher, okay, in anticipation of a reversal. And that is the reason it only moved up by 30 pips. Okay, now a few minutes later, the Whipsaw was confirmed. We'll talk about what a Whipsaw is in a minute, okay? And the market moved lower, taking the euro dollar pair lower till the end of the day. Okay, so as mentioned earlier, looking at all the numbers and not just the headline numbers of employment change may provide you with good insights. Okay, checking the calendar and what other releases there may be is very important. Okay, for the next few months, those dates that you see on the screen right now are important. Okay, note that we are expecting also today the labor force participation rate, okay, to come out along with the NFP. So recalling last April's example that I mentioned just earlier, a Whipsaw may be seen or maybe not, okay, as market players may move the markets in anticipation of a lower or higher number when combined with the unemployment rate, of course, or not. Okay, so it really depends on the NFP report in general, on all the reports coming together, not just the headline number. Okay, now the headline number is what may move the market sharply, okay, within the first few seconds after the release. Okay, the few minutes after could determine where the market could be heading, depending on whether we have experienced a whipsaw. Okay, now let's see what a whipsaw is. Actually, the whipsaw is one of the risks every market participant is good to know. Okay, but let's start with the main one first, okay, as we are exploring the risks now, which is volatility. Few seconds before, during, and few seconds to maybe a few minutes after the release, the volatility is very, very high. I mentioned an average move of 76 pips over the past few releases just earlier. Okay, this is close to daily volatility in a few seconds or in a few minutes. Okay, so that's the daily range, just in a few seconds. So volatility may provide gains, but also may provide big losses. Okay, now let's look at the whipsaw. We pretty much saw what it is, but let's do it once more. Okay, so that everyone is clear about what it really is. A whipsaw is a large move, either up or downwards in the market, okay, and it's followed by a large retracement and then a continuation onto the retracement. Okay, this happens when market participants move the markets based on the headline number and followed by what they anticipate from the rest of the reports. That we saw a few slides back. Okay. Next, on risks. Risk traders is good to be aware of is the wide spreads a little before, during, and a little after the release. Okay, spreads widen quite a bit. We're talking about 10, 15, 20 pips, okay? And this is due to the sudden large moves. Okay, the liquidity providers basically increase the spreads because they don't really know where the market is. At any moment, short moves occur, okay? And hence, they increase the spreads to protect themselves, okay? This also occurs because of slippage, okay? Which is the time taken to fill your order, okay? And the number of orders during the NFP is huge, okay? Now, if one trades during the release, of course, all the above risks play its part, okay? However, if you choose a different time, before or after, you may minimize the effect of those risks as spreads decrease, volatility decrease, there's a minimum slippage, and the chances of a whipsaw are not many, okay? If one selects a currency that isn't too volatile, or one that is either strong or weak against the dollar at the specific period of time, this may also minimize risk, as a strong currency on a bad NFP will have more strength against the USD counterpart. Okay. Lastly, on risk, using the appropriate size and leverage, as well as having properly calculated entry and exit levels, may support reach your risk to reward ratio and your goals. Okay. Let's look into more interesting stuff. How to position yourself for NFP. There are two methods I like to use, two methods I identified and call. One is based on fundamentals and the other one on technicals. So the fundamental method allows you to position yourself before the release, where one may identify opportunities based on models, okay? Or you can position yourself during the release, which basically means trading the headline number. Okay. The technical method, on the other hand, allows you to position yourself during the release, where one may identify entry and exit points, and also after the NFP release, where one may trade the continuation or the extortion of the move. So let's see those a little closer. Okay, using the fundamental methods before the release, one may identify opportunities based on models. Okay, so building a model is easy. Okay, here's what one may do. Create averages of the previous NFP or the previous NFPs, okay, on unemployment rates or jobless claims. Okay, for example, take the 6 simple moving average by adding up all the headline numbers over the past 6 NFPs, okay, and you have an estimate. Look into previous PMI reports and everything involving basically employment figures, okay? Find the votes for the forecast. You can find those, I can give you a link later if you wish, and also watch the ADP report. Okay, basically that was due yesterday and it was negative, okay, almost 30K below the expectations. But mind you, also that the last 6 out of the 7 ADP reports have been far away from the actual NFP estimates. Okay, the divergence actually has been widening. Okay, yesterday also the unemployment claims report we saw an increase, which tells us that more people claim benefits. Okay, and also the ISM report was positive. However, the employment index decreased 2 percentage points in June, okay, to 55.8% from the May reading of 57.8. What else you may do is check the revisions of previous reports. Okay, see the variance between the expected and revised number. Okay, maybe work out an average and have it to estimate the NFP. Finally, reading the Challenger report may also provide some good hints. Okay, you can see the website where you can actually read the Challenger report on this slide. This one is the report on job cuts. Okay, so just for the record, employers announced plans to cut payrolls by almost 30,000 jobs in June. Okay, so and that would be the lowest monthly total of this year, and it's also 6% lower than May. Okay. Now, to position yourself for NFP during the release is pretty much trading the headline number, having set entry and exit levels, okay, based on the average numbers calculated or your estimations. Okay, one may look at the deviation between the actual and expected numbers and the previous numbers to identify a possible entry point in case the actual data are larger or smaller than the deviation. For example, let's look at May's NFP. Okay, the deviation is minus 47k, so the deviation is 47k. So assuming this 47, for example, is an average. Okay, so if June's NFP comes out 47k better or worse, there are chances that the market will move with the same strength as it did in May's NFP. Okay, in terms of pips. Okay. So now let's move to how to position yourself during the release using the technical method. Okay. Here one may identify entry and exit levels with the use of support and resistance levels, okay, or even the Fibonacci retracement or extension. I assume everyone here can draw a support or resistance. On this slide, on this picture, we see May's NFP. Okay, in green, you see the support and resistance levels, a break of which could be your entry. Okay, a reach of the furthest one could be your exit. For exits, one may also use the RSI or other indicators and look at the overbought or oversold levels to take profit. In the second technical method, one may use the same tools as before. Okay, the only difference is that now the timing of a possible entry changes. Okay, and when I say changes, it moves after the NFP release. This is often considered to be the safest method when positioning yourself for NFP compared to the others, okay, I just shown you. As you're moving away from high volatility, high spreads, high chances of a slippage, and also the whipsaw effect. Okay, I mentioned this earlier while going through the risk slides. Okay, so I mentioned that the timing you enter the market plays a significant part on risk. This is the method used. So here you could enter on the break of the lowest low created after the release. Okay, and exit at the Fibonacci extension, 161.8, for example. Note in this example, the RSI also worked as a confirmation. Okay, if you note, the RSI trend line broke at the same time as the lowest low was broken by price. Okay, now that we have finished with the methods, let's look at how one may find the right pair to trade. Okay, the most tradable ones for the record are the euro dollar, dollar yen, pound dollar, dollar card, and gold. Okay, however, there is a way for finding the most appropriate pair one could trade for the current NFP by using the economic calendar. Okay, using the dollar index, and also by checking the currency's performance. So on the calendar, one may use important events that occurred over the past few days or weeks and check what effect those had on their respective currencies. Okay, for example, FOMC, rate decisions, GDP releases, and any other significant economic events, okay, despite the country. Okay, take, for example, the Bank of Australia's decision to keep rates unchanged, okay, last Tuesday. That took the Aussie against the dollar 90 pips lower, okay? So, in terms of the dollar index now, the dollar index measures the strength of the US dollar against the majors, okay? So its performance may give a hint about how strong the dollar is, okay, across the major pairs. Other observations also may help. For example, Euro hit a November high after the last NFP report on June 2nd. Okay. However, the index did not reach a November's low. Okay, which tells us that some pairs haven't been performing as strong as the euro did against the dollar. Okay, actually, looking at the USD JPY pair, the dollar yen, it has fallen since last year. Okay, 3%. Okay, while the euro gained 8.5% or so. Okay. Lastly, one other way to find which pair may be most suitable is to check the performance of all currency pairs. Okay. Mainly the weekly and monthly could be good indicators. For example, okay, you could go to investing.com and go on the rates side. See the performance on the table. Okay, and you may find which pair to position yourself with. Okay, let's now see how one may protect his or her capital. Okay, one way, of course, is to stay completely out, okay, as the volatility is huge. The spreads are big and you already start with a big loss due to those factors. Okay, adding the possibility of slippage and a whipsaw, it may be better if you just stayed away. Okay. One other way that may help you protect your capital if you decide not to stay away is setting appropriate stop loss and take profit levels ahead of the NFP. Okay. Instead of looking at your charts and close your trade, as this can remove the emotional aspect. Okay. Setting stop loss and take profit levels ahead of the NFP removes the emotional aspects. And note, when I say appropriate stop loss and take profit levels, appropriate could be 1% of your account. Okay, that would be your stop loss. Now, in case you have open trades already, okay, you may look at either closing your positions or hedge. Closing your positions, you may have to take a small profit or a small loss in order to avoid the risk of the high volatility. Okay. Lastly, hedging. In case you have open trades, it may help you reduce your losses and hence protect your capital. Note that staying out is the safest way to protect your capital. Okay. Okay, now the time has come up. Okay, and we can go over your questions right now. Okay, please know that in case you have any questions that isn't answered, please email support@FXPRIMUS with the title NFP webinar. Okay, and I'll get back to you as soon as possible. Now, I'm ready for your questions. Can I get this PPT? Mayur, yes, I will liaise with marketing, and if you have been registered for the webinar and we'll have your email address, we will send it out. Guys, do you have any questions? Was this recorded? Andrew, yes, it was recorded. How to hedge? Okay, hedging basically means opening a trade against your original trade, okay, against the direction of your original trade. And this is how you can protect your capital during a volatile period. Young, thank you. You're welcome. Guys, do you have any questions? Henrik, no more questions. How you trade the NFP? Swan, I've just shown a couple of methods that they are being used in order to position yourself before, during, and after the NFP. Okay. Do you trade the NFP? No, I do not trade the NFP, Swan. Guys, do we all know how to draw support and resistance levels and how to draw a Fibonacci line in order to identify possible entry and exit levels. Okay, Andrew knows how to draw support resistance. If you have existing position, would you hold it through the NFP or not? Swan, if you're asking personally what I would do, I wouldn't. But as I've said, I've just shown a few slides back, if you have an open position already, there is only two ways going forward, okay? Incur a small profit or a small loss, depending on where your position is actually now. Close your trade and just accept, you may close a trade and accept a loss or loss profit. You may leave it open and just, have been exposed in a lot of risk, or you may hedge your position. And just to make a note here, having an open position through an FP or not, it really also depends on your trading strategy, okay? Because if you're a long-term trader, the 5 pips move, the 50 pips move, it will obviously affect your trade result. But in the long term, if you're trading on a monthly basis or weekly basis and you're looking at long term and the daily charts, then you shouldn't have much of an effect. Okay, so it really also depends on your strategy, whether you're a long-term trader or not. Guys, any more questions? Are we all clear on everything that was explained? Is there anything that you would like to have a look into closer? Andrew, no problem, thank you. Guys, I will wait. Okay. How you re-enter your position if you exited before the NFP? This is basically a way to hedge. It's not necessarily a way to close your position. If you want to re-enter, you could hedge, okay, against the direction that your trade is going, because you also have to think about that you will have 2 trades open, right? So you will incur double the spread cost. So closing your trade is one solution. If you want to reopen, you could do. If you would like to hedge your position, also you could hedge your position, but staying out, of course, is the safest way if you are not willing to risk any of your capital. Okay, Henrik, thank you. Sean, have I answered your question satisfactorily? Yes, okay. Guys, I will wait for another minute or so to see if there are any other questions. And if not, we could close this off. Please note that in case there is something that you forgot to ask or something that you thought of about later, please go ahead and give us an email, okay? Send us an email at support@fxprimus.com with a title NFP webinar, okay? And I will get back to you with an answer. Any more questions, guys? Okay, no more questions. Thank you for enrolling to this webinar. Okay, I hope you enjoyed. Keep an eye on our site as well if you want to read any related reports and articles about the NFP. You can go on our site and click through the educational section and the special reports. You can find our latest NFP reports and reports on other instruments or for other events. So, and don't forget, in case you have any questions, feel free to email support@FXPRIMUS, okay, with the title NFP webinar. Okay, thank you very much and have a safe day.